David Sand, when people talk about sustainable or ESG investing, they're usually talking about stocks. So why is fixed income a good place for people if they're interested in impact investing?
So at Community Capital Management, we work with clients who want to make an affirmative statement about where their money goes. They want to make money, it's a market rate investment, they're placing it in community economic development within the United States, and they're building portfolios of affirmative, job-creating, and affordable housing investments.
All right, and so are you doing positive screens for your bonds or negative screens, so no coal mines, but on the other hand, how are you doing it within your portfolio?
We take a bottom-up approach, so you could think of it as an affirmative or an inclusive screen. We don't buy corporate bonds as a firm, so we're not working with some of the same restrictions that other ESG managers are from working in the equity space. And we're really just talking to clients about what they care about, whether it's economic development, affordable housing, small business lending, support for the arts, sustainable agriculture. We have a list of impact themes, and then we work to build high credit quality market rate portfolios around those themes.
And speaking of affordable housing, you own a lot of agencies over at your fund. So what's your expectations for agencies, Fannie's, Freddie's, in 2016?
Well, Fannie, Freddie, and Ginnie are all various entities of the U.S. government these days. There's a lot of talk that some of that may change. That talk has been going on since before the financial crisis. We know they're excellent investment instruments. They're deeply liquid markets, very, very transparent, and we're very, very happy to be major investors in them.
And will you continue to be so if the Fed hikes rates? So essentially give me your view of what happens when rates go higher.
Well, you were nice enough to have me on this show over a year ago when the consensus was that rates were going up. We didn't feel that was quite as much of a sure thing as people said at the time. We're very happy to say that that looks right. Pretty clear that the Fed wants to do something this month, and it's probably a good thing for the market if they do. The uncertainty's been an overhang for long enough. We don't see any reason for a sustained series of rate hikes. So a bump up in the Fed funds rate will probably settle things down. You can see already in the bond market that there's stability. 10 years actually been trading lower, which is kind of unusual if you expect to be a wave of interest rate hikes.
Stability in govies, however, in the high yield market, a lot of uncertainty right now. Can you comment on that?
Well, sure. It's a space that we don't invest in, but we follow it very, very closely, and we have a lot of clients who do invest in that area. Tremendous stress happening there. It's been known for a long time that the major broker-dealer firms are not maintaining positions. A lot of folks have been concerned about widening in the bid-ask spread. We saw a great deal of that happening last week, probably going to continue for some time. What we like to do is have clients who sleep at night, so we're invested in deeply liquid sectors that trade at very tight spreads, and we're pleased to be in that area.
And then finally, bringing it all full circle, a lot of the worry in the high yield market is due to problems in the oil patch, in the energy sector. So does that make your investments in ESG or sustainable investments, is that better for wind investments and solar investments?
Well, so there's a couple of different things that go on there. A lot of alternative energy investments on the equity side, which is not what we do. We're a fixed income shop. The equity is pegged to the price of gas indirectly. Oil and gas obviously hitting record lows. So the comp for alternative energy may not be as good. On the debt side, though, we see increasing demand for alternative and sustainable energy. Certainly the steps that were taken in Paris last weekend support the long-term fundamentals for that market as well.
All right, well, thanks a lot, David.
Thank you for having me.
Thank you for watching The Street.